Good day. This is Seewing Yee. Today, the topic is build to rent, the emerging new real estate asset class in which if you're a small time real estate investor, you may be able to participate. This was a big boys game, the big players, but you can get a piece of the pie as a small mom and pop real estate investors. Please make sure to like and subscribe to my YouTube channel and also subscribe your email into our website so you can be a free member of our real estate investment club. Thank you so much. So without further ado, let's get it started. This is very exciting. You need to listen from the beginning to the end. Towards the end, we have some really exciting, practical investment opportunities that you can take advantage of. The headline for my presentation is build to rent, the best real estate asset class. We're going to find out and you will determine. Please comment on below as well. I do answer your comments. Wall Street landlords stockpiled 110 billion or lying in wait for their biggest American home buying spree yet. Okay, think about it. Actually, Wall Street and the hedge funds, they have entered the residential investment market ever since the last market crash around 2009, 2010. And they've been buying in bulk because they know what they're doing. They know how to run the numbers. That's how they achieve their yield and that's how they achieve their return on their investment. So prepare to ride on their coattail, if you will, and participate in your small little world in this whole big picture, huge, big time investment opportunity. Here we go. All right. Who are those hedge funds, Wall Street cats? Look, for hundreds of years, Wall Street, they have controlled the financial market. They have controlled the stock market and they create this mutual funds, amazing industry and stocks and bonds. And for years, small investors, they can participate in this very passive mutual fund investment. So Wall Street, they are not stupid. Those smart people, they are entering the real estate investing world because they have seen the returns associated with doing this. So Goldman Sachs, JPMorgan, Blackstone, among the few of those huge Wall Street firms that have deep pockets and they want a piece of the pie on residential housing market. The Wall Street blueprint, who comprise of these people? Every year for the years and years, the Wall Street firms, they hire the best and the brightest. Who are they? They are the MBAs from Harvard Business School. They are from Stanford, from MIT, from all the Ivy League schools. These highly talented, highly intelligent young men and women, they enter the Wall Street world and create a investing blueprint, which has been proven over time, long term, to be very profitable. We as small time investors need to leverage their expertise. You have heard about using leverage as a real estate investor. I'm creating another form of leverage. You leverage all these smart people and follow with what they're doing and get a piece of the pie, as I said. JP Morgan, they want to be in landlord business. Institution, they are also called institutional investors. They have huge amount of money. And this article says right now, the institutional investors already own 700,000 single family homes. There's enough money to buy another 400,000 based on the $110 billion they have to plunge into the housing market. Right now, the hedge funds, Wall Street, only have 3% of the nation's 20 million single family rentals, according to Wolfstock. But MetLife Investment Management predicts it will grow to 40% by 2030 or 2032, talking less than 10 years. Wall Street and hedge funds, they will be the owner of 40% of these single family homes. So what does it mean? That means a lot of primary home buyers and a lot of small time investors, you are being outbid by these Wall Street giants. I would not take it laying down. I would want to get into this game. I want to use their business model. What is the business model? Build to rent. I'll get back to share with you what I mean by build to rent. Again, Wall Street on a home buying spree, as I mentioned before. The emerging is not new. It's been around for the past decade, but it's really emerging. It's the build to rent new construction, not just single family homes. We're talking single family home, duplex and fourplex, 1 to 4 units. This is their core investment philosophy. So far over the years, recently, where have these hedge funds, Wall Street has investing? Phoenix, Dallas, Houston, Orlando, Atlanta, Jacksonville, Charlotte, Tampa, Sarasota, Austin, just to name a few. They are working with the large nationwide builders and they are buying on a particular community in some of these locations. They buy like 5,000 or 10,000 of the new homes from these mainstream builders and they convert them into rentals. Build to rent community is very desirable. When a renter rents in this kind of community, they feel like they are part of the community. These are, white picket fence, single family home with a backyard. They have amenities in the community. The renters feel like they own the property, so they take care of it. They are willing to pay a premium rent. We have high quality tenants. Besides, we are entering into greatest renters nation. What I mean by that? Because of the skyrocketing home prices recent years and the elevated mortgage rates that created the lowest home affordability scenario in history. There are more renters now than ever before because they cannot afford to buy any homes. So they are relegated to renting. So you, as a potential risk investor and or landlord, you should participate in this piece of the pie to build to rent business model and invest for the long term and you'll be fine. Build to rent attracts higher income tenant. As I mentioned before, you are the investor, you buy this kind of homes is a great inflation hedge because you will, just like buying any other rental property, you will increase your rent. You can rent to a good demographics of renters, the millennials, the Gen X. Many of these higher income renters, they prefer to rent single family homes and not apartments. Build to rent has very strong fundamentals. The demand for build to rent continues to skyrocket, pushing average rents to an all-time high of at least $2,000 and it's continuing to grow. Yeah, it's a very desirable emerging real estate asset class for investors. Big caps such as Wall Street and small time investors like mom and pop investors, wherever you're located in the country, you can participate. Mom and pop investors, like I said, you can participate. You can get a piece of the pie. So one area which I highly recommend, although there are other business venture locations, as I said earlier, but clearly Florida, in my opinion, has the best value. Investors like you can participate because the numbers really work. Their homes are very affordable compared to the other build-to-rent business markets in other parts of the country. Here are my top 10 attributes of investing in Florida. Read on your own. Florida is the number one fastest growing states in the country, number one fastest growing market. You have massive amount of migration throughout the years, not just recently, but recently has only accelerated the migration from the people from the Northeast, people from the Midwest, and people from the West and in California, where I live. They are moving into Florida to retire, to work, to live, and to have fun and to have a better lifestyle. All the reasons. All right. So again, you can pause this screenshot on your own and just digest amazing attributes that Florida offer you as a real estate investor to make your money work hard for you to achieve your financial return. All right. So again, Florida is number one in terms of tax situation, property tax, state income tax. There's no state income tax, by the way. So that's another attribute. Again, I don't want to hold the numbers, but if you buy in Florida, all the numbers make sense. You have a similar household income, similar, even higher rent. But as an investor, if you buy into a rental property or built to rent property, you're buying at a lower than the median home price in Florida. in this case, to Coral, Southwest Florida, compared to similar income and similar rent in somewhere in a Western region like Salt Lake City. This numerical comparison is not only comparing the Western region in terms of the numbers that works for cash flow markets. So you might as well put not only Salt Lake City here, or Boise, Idaho, or Phoenix, Arizona, or Las Vegas, or Austin, Texas. They all have similar numbers. So why Westwood the cash flow is very low, if at all, with 25% down payment, will achieve very significant cash flow, especially in the mortgage reduction program that I'm going to talk to you about toward the end of this video. All right, so states. All right, Florida is a landlord-friendly state. This is the path of growth. This is suburban growth that those hedge funds and those Wall Street companies, like those institutional investors, they are going into deep suburbs, deep path of growth within Florida, because the main metro, forget about Miami and South Florida is a multi-million-dollar playground for the rich and famous. You can't cash flow in this very high cost South Florida area. So forget about that. So again, 5 years ago, yes, our investors have purchased. By the way, we've been investing, myself and hundreds of our investors have invested in Florida. And so I know this market very well. I have investment properties here in Florida as well. But anyway, this is the prime markets. This is suburban growth, path of growth, where home prices are much cheaper than the major city center areas in these locations. And homes are very affordable right now for the time being. And you have many of the locals and many of the out-of-state migration people, they are moving into the suburbs, deep into the suburbs. We're not talking 10 miles from the urban core of these major Florida cities. We talk about 1 hour or slightly further away from urban core of Orlando, Tampa, Jacksonville, Cape Coral, and those kind of places. Does that make sense? All right. And so I think that's pretty much. I have to say, I'm going to fast forward, and Florida has all the great attributes. These kind of homes are built in a higher level grounds. They are not subject to higher insurance costs. And this kind of builders, they know what it built. They have insurance are very favorable. All the misleading information, inaccurate information out there. Yes, only in coastal areas, Florida has a hurricane situation, higher insurance costs, but not inland. So anyway, so here are some of the sample properties that an investor follow. Some of these build to rent companies out there, they have allocated some of their inventories, some of their limited amount of inventory for investors like you and I. So this is an off-market opportunities. The mainstream public are not privy to this type of opportunities. Only you're part of our network. For those of you listening, if you want to be part of my network, you subscribe your email, input your email to my website, and become a free member of our organization, and you'll one of those kind of things. All right. I'm not going to go through all the numbers. Suffice to say, this type of numerical metrics makes sense. The rent to purchase price ratio really makes sense. This $89K property can rent for $2,100 a month in rent, put 25% down payment, you will achieve several $100 a monthly cash flow. So Ocala is one of the places that is fast growing. Another location is Palm Coast, which is 1 hour south of Jacksonville and an hour and 15 minutes northeast of Orlando metros. Palm Coast, this fourplexes like 460K. It rents very, very well for that. What's the rental? I think the rent is per side, I would say $1,700 per side. You can get cash flow easily. It's a strong rental market, because people need to rent when they move into the suburb before they buy. High quality tenants, renters. Palm Coast in a location, then Jacksonville. Outside Jacksonville, we have fourplex available, which is very desirable, new construction, very good cash flow, 25% down payment, which is very rare to able to have access to a quad fourplex new construction that is at this very, very low price. So this is really a value add. The most important thing is, instead of paying 7% mortgage rate, which is what's happening right now, right? The today's mortgage rate for owner-occupied buyers of homes are around 6.9%, something like that, give or take. But as a real estate investor, you get some builder incentive. The builder's lender, the amazing amount of incentive. You can able to get 4.75% rate, which is amazing. It'll increase your cash flow significantly. This is 10-year fix, and then remaining years are adjustable. But of course, the expectation is that you can refinance if no rate for the 10 year is up. So don't worry about that. Amazing game changer mortgage rate that only a few investors, or you who are listening, are privy to this. Amazing. Now, of course, another loan program we have is 30-year fixed rate for investors. They're buying from this new build homes from this builder, from this build-to-rent builder, which is approximately 4.99%, which is amazing. Imagine getting a mortgage rate at around 2% lower than the current mortgage rate out there in the mortgage world. It'll cash flow even better. So what more can you ask? This is a no-brainer. And of course, as I quoting this presentation, rental property is history's most prudent and most attractive and most stable and powerful multi-dimensional real estate asset class, because you get paid in 4 different ways. Unlike most other asset classes, cash flow, increasing cash flow, raising your rent, achieving passive income over time, amazing tax benefits, which I don't have time to go over, and appreciation, 5% historical appreciation, the magic of compound interest. Amazing. If you invest over time, 10 years or longer. And finally, the power of other people's money, the power of using leverage, only putting 20 to 25% down payment to leverage your investment, 30-year fixed rate mortgage, which is an amazing program, which is no one in the world has this type of unique fixed rate mortgage. All right. And so you can read over some additional benefits associated with owning rental property. And finally, great legendary Warren Buffett said, be fearful when others are greedy and be greedy when others are fearful. Right now, it's a fearful time. So therefore, you need to become a contrarian investor. You need to be greedy in a good way. You need to be greedy and capitalize on the opportunities. Crisis creates opportunities. And right now is the best time to continue to become a real estate investor, to buy more property and invest over time, and just write out the cash, write off the rent, write up the yield you're getting, and appreciation in the future. You don't expect appreciation, but it's icing on the cake. You have a 10-year, approximately 10-year investment horizon or longer. Real estate always will increase in value over time. And of course, from time to time, fluctuations and corrections may occur, as we have seen right now. But look, you have an amazing mortgage rate reduction program, allow you to cash flow $2 more $100 above beyond what you normally get in today's environment. And you have an amazing rental market where there are more renters. There are more high quality renters than ever before in history. And what more can you ask for? And the real estate is rebounding very well. You have multiple layers of making money to real estate, not just cash flow. What more can you ask? All you need to come up with is your down payment, and then you outsource your debt obligations and your mortgage payments to someone by the name of a tenant. That said, as I conclude this video presentation, if you receive value from this video, please smash the like button and subscribe to my YouTube channel. And also, more importantly, to drop your email into the form below on my website so you become a free real estate member of our real estate investment community. And every week you will receive great content, real estate education to help you become a new investor. And also when you're ready, we have network of markets and realtors in different locations, not just Florida, to help you buy successfully turnkey properties remotely, passively, and as a total package, professional property management, do all the legwork for you, and so you devote your time to to live the life which is important to you. Thank you so much for listening to the Seewing Yee, or see you on the other side. Bye bye.